This is the weekly chart for gold, and I just want to break it down for you. So the first thing you do, you mark your highest and your lowest points. So this is one of our lowest points, which is around 4,100. And then this is our highest point gold has ever been, which is around 5,600. So from there, we can now come and see that this price difference here is what is causing the market to actually be bearish. And like we had marked that the difference between this high here and then this low is where we have a strong candle break, which is here. And it's from this difference that we've been getting resistances that price is actually heading down now. Now, the question is whether price will come all the way up to 4,100. That is what we shall have to see, especially on the lower time frames. So once you have that clearly marked out, then you can begin to come to your present candle. So if you look at this present candle here, the lowest point from last week was here. So this becomes your potential support area. And then if you look at also the difference between this low and then this new high was also here based on the weekly. So meaning if price pulls back into this is an area we shall be expecting resistance. So once you have that cleared out, you can switch to a lower time frame. So let's go into the daily and begin to see how price is actually playing out on the daily time frame. So as you can see here, this price difference here is what has actually caused price to come down. And then we also have another price difference on the daily because the difference between this high and this new lower low is actually here. So that means now this is an area where we shall be looking for trading opportunities in case price pulls back. Once you have these areas clearly marked out, you don't have nothing else to worry about. You just have to now come and study the structure of the market on a lower time frame. We already have your potential supports, your potential resistance. Then you can now come to a lower time frame. And then the other thing you need to notice is that in case this level is broken, we could have an opportunity for market to come to these other lows here. So this can potentially be our targets. So once we have this, we can just switch to a lower time frame. In that case, that will be the 1 hourly. But I want you to notice something very important here. There is a tendency for people to think that this is a very strong support, and then they begin to look for buying opportunities that they can swing for long. I want to explain something now that could actually improve your trading so that you don't fall trap this. But of course, you remember what we had marked as the price difference here on the daily. That is actually where the market turned from. And then to just make you understand this structure from here. So I clearly told you that from price differences, that's where we get resistance. So from here, we got this resistance, double top. And then from here, we've been seeing a scenario where the market has been forming lower lows here and then lower lows here. So that will make this area as your first lower high. So, and then price comes to form a lower low here. That means this leaves you with this another high here. Okay, so let me just mark it like that. So now, from a swing perspective, as long as the market does not break this high, okay, if you don't see a strong break of this high to make the market continue upward, you are still bearish, despite the fact that you have a support area here. Okay, so now, as of today, the trading opportunities we're going to be looking at will be from here. So when price pulls back into this area here and then fails to break, because I'm still bearish, the market is still bearish, we haven't changed to bullish yet, so there is no need to begin to look for swing perspective and swing trades. So if the market pulls back here, and then we have a formation of a double top, a strong engulfing candle or break of structure to the lower side here, then we can look for that sell. Whereas still, if the market breaks, if it comes and breaks this other support here, then this is what could actually be happening. If it breaks this, then pulls back and then gives us another break to the downside, then we can continue to look for selling opportunities. So now the most important thing you need to do here, you just have to watch how price is going to play out in between this area here, because we have not yet become bullish. Only time we're going to be bullish is if we break out of this area here. So just wait for gold at around this area here and see what happens, if it can give you a clear structure or not. So that's what you need to wait for. So let's see how this is going to play out. Today is just Tuesday. We have about 4 more trading days, and then you just be patient and see. Once price gets out of this range, that's when we're going to have a good trading opportunity.